All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into the markets here. So last week, I said there was probably a technical bounce in play. We had that huge down move last week, and we closed below the June lows for the quarterly close, and I said a lot of that was probably quarterly OPEX related, especially the last 10 minutes of the afternoon on Friday. And I said, the market, we're expecting lower prices, but I said short term we're expecting some type of a bounce, and we got that this week. So Monday, Tuesday, we had a nice pump up, and it doesn't look like much, but this is 200, from the low here to this close here on Tuesday. That's a 200-point move on the SPX, 20 points on the SPY. And there's only really been a handful of times, maybe 9 or 10 times throughout history where you've had a 200-point move like that in just 2 days. So that is a monster bounce there. And then, really Wednesday, Thursday, we kind of just hung in there. And basically what it comes down to is just a 20 moving average rejection. And obviously the catalyst was the non-farm payroll number on Friday. And, it wasn't the worst number, but it wasn't the number the market was looking for. The market wanted a really cool jobs number, and it came in hotter than expected. And when the market's weak, you're going to have these type of reactions, and the market is weak. We haven't been able to get above that 20 moving average really since August, and that's been resistance here on the daily time frame. So the market is in trouble now, and I thought that we'd probably hold up. Honestly, I thought we would hold up at least probably to the end of this week, and I was expecting the rollover to come sometime next week, but I think it's in motion now. And what I mean by that is we are probably headed down to, it's not probably, this has been my target for a while, but it is now, we're headed to 320, bare minimum 340 on the SPY, but I'm really looking for 320 there on overshoot. Especially when you get panicked towards the lows. If you follow the triple Qs, we're really looking for about 230, 220, somewhere in that area. And that would take you back to pre-pandemic highs. So that's where the market needs to test. It has not back tested that. And, the measured move there is, it's pretty much set up. So pretty much everything we've been saying in here for a while, pretty much all year long. I think we're coming into the last real leg of that. Now, we'll make lows, and then we will make, we'll probably have a relief rally that may last quite a while. I do not think the bear is over, but for the time being, I think we'll see some type of relief, but it's not going to come before some serious pain here in the near term. That's really what I have kind of planned out and projected to happen. I think the market probably bottoms, if not, a week or so before the election, then maybe right afterwards. That's really what I've got penciled in, and I believe that the wheels are turning currently. It doesn't mean we can't have a bounce day or two. Doesn't mean that won't happen, but I believe the wheels are really turning right now. And it's been a wild year so far, and a lot of people are finding out, traders and investors, that they weren't really that good of investors or traders, and they were just the beneficiaries of low interest rates. And that's really what it's been for the last 13 years. Good chart to illustrate that. It's just the SP 500 versus the assets of central banks, and I'm sure many of you have seen this chart before, but there you have it. It's pretty much right in line, a perfect correlation, and as soon as that starts dipping, only the pros are able to navigate this. But again, it's been a wild year. I do think we're going to have that next leg down. I think we're in the process of that very shortly, and then we'll probably have some type of a bounce and a pretty good relief period for the foreseeable future, but I don't think that means the market is quite out of the woods yet. Anyways, let's flip over here and get into some sectors as we always do. We always start with the semiconductor. So SMH down a whopping 6% on Friday. Again, you guys know me. I always never want to see the semis leading to the downside. You always want to see the semis showing relative strength, and they did not. A lot of that was on the back of AMD, which Thursday afternoon, they adjusted their guidance for their next earnings report. Basically adjusted it lower. They got slammed on Friday, down 14% on the day, closed near the lows, and that really dragged the whole sector down. AMD here is kind of coming into some intriguing levels, though. You do have a nice preview. This is your pre-pandemic high right here. So AMD's into that. Then you have this down-sloping trend line kind of intersecting. So this whole belly right here is good support on AMD. That doesn't mean we can't cut a little bit lower, but I think AMD is starting to get a little intriguing down here. And this may be something that, if we do bottom in the next couple of weeks, like I think so, excuse me, like I think we do, this might be a stock to play here. Isn't, you know, it's a quality company, you know, with a, you know, a good management and good products. It's not like some of these other ridiculous growth names that were trading at insane valuations like Zoom or, you know, Peloton. But anyways, so AMD obviously leading to the downside. NVIDIA took a pretty big hit there as well. Intel down over 5% on Friday. So that led the semiconductor sector lower. And again, semis, when semis are leading to the downside, it's never a good sign. Semis cousin or little brother, IGV as I like to call it. So cloud software down 4% on Friday as well. Did not make new 52-week lows. It had a nice little bounce earlier in the week. Basically went up and back, tested this trend line, and, you know, got dumped like everything else. But again, this is, you know, I show you guys this pretty often, but that's as good of a bear base as you're going to get there on that IGV. That is a weekly pattern, and this is set up for a nice move lower here as well. So be careful with cloud software. Dow Transport's also taking a hit as well, down just under 3%. Again, no 52-week lows, but this had a lot more downside earlier, or I should say later in the month of September than the rest of the market. This kind of led to the downside. And again, we know the transports are a leading indicator as well. And the transports started dumping before everything else did. So that was kind of your canary right there. But transports rolling over as well. I don't really talk about the jets that often, but just to bring this up, I haven't talked about them in a while, but take a look at the airline stocks here. I mean, these are barely, you know, in the grand scheme of things, barely off of the all-time, or not the all-time, I think it is the all-time low, actually. Yeah, it is the all-time low, but bottom line, the pandemic lows. You're barely off the bottom. I mean, it's not that far away, so this is a sector that's shown real, it's, you know, it's struggled, you know, versus, you know, the SPX here, where you're still way off of those lows as far as the rest of the market. And another one that's, you know, not really a transport, but, you know, Carnival Cruise. Look at this. This is below pandemic lows. So these travel names, just in really rough shape right now. CCL, Royal Caribbean, also very close to lows here. You know, basically getting rejected at that 20-week moving average recently. Did have an up week this week, you know, from an oversold condition. But some of these transports, these travel names are just getting bludgeoned right now. And again, not a good sign for the economy in general. Inverted yield curves, you know, definitely playing a part of that. And they will play a more significant role moving forward. Speaking of 10-year yield again, so a little pullback last week and then a nice little pop really into the closing bell on Friday. And we did play this on the long side with Carnivore Trades with TYO to the long side. So this is a leverage ETF on the 10-year. Nice little pop there, quick, easy trade for us. But bottom line, there's a 30-year there as well, making new highs. It did back off a little bit on Friday, though. But yield's still holding up okay. And then the 2-year, this is really the bottom line. Again, you had kind of a little bear flag here, bear wedge, and that started to break down on Friday. So again, the 2-year is really key here. And we're going to watch this very closely moving forward. We've been watching it very closely really all year, but most specifically the last month or so. And this will tell you if the market's going to bottom or not. When the bond market starts to front run the Fed, that's when you know that things are getting ready to put in a low, but the 2-year is not quite suggesting that yet. And the NASDAQ still has some catching up to do. The NASDAQ is just at double bottom, and the 2-year has been through double bottom really for the better part of the last month. So keep that in mind here, and that does suggest more downside moving forward. For home builders, XHB and the ITB actually held up relatively well. They did dump on Friday, but actually still, you know, you did put in a higher low there. So that, you know, we'll give it a little bit of the benefit of the doubt there. The trouble with the real estate sector right now is the VNQ, the actual real estate stocks here. This thing's just getting hammered. Exceeded my downside targets. My kind of, my lowest downside target was about 79. That got exceeded last week, and then this week the bottom fell out. Got all the way down to sub 77 there. We are into a 618. So that is worth noting. So it does have a 618, so maybe you could get a bounce here moving forward. But after that, you've really got all the way down to gap fill and then the 75% retrace. Now, for what it's worth, this is wickedly oversold. I mean, this is about as oversold a chart as you're going to see, at least in the short term. But just really goes to show the current state of real estate right now. And again, those inverted yield curves really putting pressure on the economy as a whole. Speaking of which, XLF here. So banks, obviously, these, you know, that there will be a day of reckoning for them as well. It might not be right away. Sometimes it takes some time. But again, that is going to be a problem moving forward. And XLF, getting slammed on Friday, down 2.37%. Again, just like everything else with that 20 MA rejection, and really couldn't even hold the gap fill. So it's right back down in this lower range here. And, I feel like it's just a matter of time before these test lower prices, very much like the IGV. You can see kind of this weekly bear base here being built on financials. So again, not a good look there. Overall, the broker dealers are still one of the strongest sectors in the market, though, still holding up well. And again, these guys do benefit from the volatility. They sell options, they sell premium, and they sell commissions. So they make money in commissions. So that is part of the reason why they've been able to hold up better. But again, the whole sector is under pressure. All right, over to energy now. So crude, what a week for crude. Nice 5% gain, a little over 5% gain on Friday. Nice pop. I talked about this. I said I like the low 80s, and anywhere below that, I liked it. I really would have loved it better if we got to that 75 handle. That would have been a buy with both hands level. But a nice little bid here all week long, and we can take a look on the weekly. They basically defended that 100 moving average, and I told you guys last week, sometimes when you get a doji candle after a downtrend like that, that's kind of the signal that they're all right. Now there's equal buyers to sellers for the first time in a while, and that can kind of precede the reversal. 100 MA got defended, so nice little bid here for crude. And you are peaking above this trend line right now. I do think we're a little short-term overbought on this, and I'll clean up these lines for you so you can see a little bit better. But if you look at this area, this was kind of your previous resistance in February, then came down with support throughout March. That broke, then it got back tested as resistance here. It failed, so we're kind of overbought going into that, and maybe you can get up to the 200 or 100 moving average. You got that necktie right above, but I think right in this area is a good pullback zone for crude. I will be a buyer again on dips. We did take some profits again on this crude trade this week. It's been a really good level here. We've traded it twice now in the last month, made money both times, so nice trade there. But again, I do think it's short term, just getting a little overextended. Doesn't mean much in the grand scheme of things. I will be buying dips in oil moving forward. XLE here. Look at I mean, this is a power thrust here on XLE, and this has been holding up really well. We've noted that, pretty much every week here, almost every day. I talk about it on my channel. But XLE is one of the strongest sectors in the market, and the XLE was green for really the whole first half of Friday here. And then you compare that to the S&P. Look at what it was doing on Friday. So the XLE was holding up that well. Now, I do think we do have this trend line here. We got above it Thursday. Did not confirm Friday. I think it's a little overbought here short term. It's pretty extended there. So a pullback may be in order, but I do think it puts in a higher low, and it could break through that trend line. But that is a nice impulsive move. That's what you want to see when a stock is about to make a breakout. So nice move there for XLE. XOP, same thing, right into that kind of upper trend line, going back to the June highs. And OIH a little bit on the softer side, but it did reclaim that, the 200 moving average there, and basically closed right on it on Friday. So that is in much better shape here. As last Friday it was below all four major moving averages. It's now above. So nice little move there for the OIH. Nat gas here, nothing's really changed too much. We still, I do still think, that this is kind of like bearish inside bar here from the move down. So that would kind of get you down to that 550 area. Again, there's a head and shoulders pattern right there. The target is right around 550, maybe 530, somewhere in that area. I do think that will be a buy, very, very strong buy level for nat gas. So that's the area I'm looking for here moving forward. But overall, nat gas by and large, mostly sideways for the, pretty much all week long. Let's see what we have next. So let's talk about uranium. Camco here. Again, kind of a choppy pattern here. It's been all over the map, but again, it was red on Friday with everything else. It did kind of pull back in this week, but it's been holding up, and you're still above all four major moving averages. So I know this has been a volatile name, but the trend is up and it's holding on just fine for now. I don't really have any complaints with the chart. URNM's under a little bit more pressure here, but it's still holding trend for now. The only thing I don't like is these lower highs. So that's going to be a problem to contend with moving forward, but for now it's hanging in there okay, so no real problems at the current time. And then lastly here with the energy and ag space, we didn't talk about ag last week, but DBC had an impressive, and I mean an impressive recovery this week. So we've been following that trend line. We said, this could be it is a bear flag. It's inside bar, bear flag, especially on the weekly. So you came down, kind of sideways channel. and then we broke down and got below that 50 moving average. But this week, we may have a failed pattern here as you close back above that trend line on a weekly basis. So that is a power move, a power reversal there. We need to see follow through next week, but that is a nice move for DBC. I am definitely intrigued with that move, and it is showing relative strength. And I told you guys before, you can have these bear flags in uptrends. A lot of the time they fail when the trend is very strong, and this is a strong trend. Look at the moving averages here. Very nice equal parallel spacing. That tells you that the trend is strong. And so, yeah, that was a nice move there for DBC. I am definitely impressed with ag at the moment here. All right, here, flipping over to the dollar index. So I was really hoping it would get down to that 109 area, coincides with the 50 moving average, this trend line, and this previous pivot high, but didn't quite get there. It basically held the 110 handle and got a nice bounce. We'll have to see, can it put in a lower high? If it does, that's where it's going. It's going right to that trend line. If not, this thing can put in a blow off top, especially if we do have panic, like I think we will in the next couple of weeks. Target on that would be right around that 120 handle there on the monthly. I'll just show you guys that one more time. So that's really all the way up to double top. And again, you have a measured move here, you know, basically $80 to 100. You add 20, it's 120. So there's your measured move there for the dollar. And I think that's really the max move here for the foreseeable future if we were to get up there. And then let's get over to gold and precious metals. So nice move for gold this week. I know we kind of faded a little bit on Friday, but there was a little bit of a dynamic shift, right? So gold, you know, down 1% on Friday, but it wasn't crashing towards the lows like a lot of other things were. So it was holding up, maybe starting to act as a bit of a safety trade. And I noted this as well on Friday. The 2-year did break down, but you didn't make new lows. And it actually finished kind of off the lows of the day. If you look on the intraday, most of the downside came at 8:30 in the morning off the non-farm payrolls number. And you never even challenged that low throughout the rest of the day. So maybe a little bit of a dynamic shift here. It's not saying that the coast is clear yet, but there is a chance that maybe the bond market's starting to wake up just a little bit. We're not going to get too crazy with it. One day doesn't make a trend, but gold did hold up. I mean, you can see intraday, it tried to rally, and then, you know, the selling pressure was just too much there on the GLD. But the fact that it didn't go straight down like the rest of the market, you see the Russell 2000 here, went straight down all day long. This actually held up okay. So we're seeing a little bit of relative strength in precious metals. The real star here in precious metals, take a look at the GDX. Impulsive breakout move. And we actually had a little bit more upside here this week. So got through that 50 moving average, got above that, and then kind of pulled back in on Friday. But this is set up for a higher low here. So GDX showing strength. GOAU, again, royalty and streaming companies, same thing. Nice power thrust off the lows. GDXJ as well. And really the powerhouse, the star was silver. So, I mean, a powerhouse move. On Monday, that was a 6%. Actually, I think it was more than, I think it was 8%. Almost 9 at one point, but either way, a power thrust here, triggering an inverse head and shoulders pattern. That is a target of about 2275, so that can get up there as long as you stay above this neckline. I do think it has some backing and filling, some pulling back to do, because that is a power thrust there, but I do like silver here on dips, and I told you guys that 18 handle is where you want to get it. And it is starting to make its move now, so silver in really good shape here. Take a look at the juniors, SILJ, nice pop here. This week getting above the 100. It did finish below, but I mean, still, what a power thrust there. And that ended up being a little fake breakdown there on the 23rd and the 26th on the SILJ. Platinum, I also like very much so. Also, inverse head and shoulders there as well. Potentially, it hasn't triggered yet, but it is potentially there. And again, I told you guys that W, and then there's your V pattern. So that's the setup. You get a little bit more consolidation. This thing will take off to the upside. So I do like platinum here as well. And palladium, nice little pop earlier in the week. Got above this pivot high. It did pull back a little bit, but I think that, you know, the more this continues to put in higher lows, it has a good chance of breaking through that, maybe getting up to that 2600 handle again. But nice move here for the metals this week. Copper, a little bit more of a base metal. This did pull back off the highs. It tried to break above this channel, which it still can. If you put in a higher low, this can get through that. But for the time being, just under a little bit of pressure. Again, this has a lot more implications as far as, you know, if the economy starts slowing, it's going to be a little bit different here for copper. So there's a little added dynamic there as well. So just be aware of that. But copper holding up for now, so we'll just leave it at that. All right, and then over to Bitcoin. So lastly, not much to really add. So it really just went sideways all week. We did try to break out on Tuesday. And then we never confirmed that. And we're still above this long, big trend line here, but no confirmation. The bigger thing to me right now is that the weekly pattern is still just bearish inside bar. So if it can't break above that trend line, this thing is going to go a lot lower, probably down to the 12, 13,000 handle. But for now, it's hanging in there. If it does get above this trend line and you get a secondary higher high, it can get up to 22.5, maybe even 23,000. I'm not sure if that happens, but those are really just the levels right now. And until either of those things happen, I'm really kind of neutral on it. But big picture, I am in the bearish camp. All right, so yeah, let's flip back over to the spiders here one more time. So again, I am looking for, you know, 340 minimum, but probably closer to 320 on the SPY. That will take you back below pre-pandemic highs. And I do think that happens by or at around the elections here moving forward. That doesn't mean we can't have a bounce day. That doesn't mean we can't have a week where we're green. But I am expecting that type of action here moving forward for really the rest of the month of October. Anyways, guys, going to wrap it up here. Come find Jason on Patreon. Come find me on carnivoretrades.com. I will talk to you guys all next week.